James bought 2 real estate deals in his first 12 months of investing in real estate. And in this video, he broke down exactly how he was able to get into those 2 deals without any prior knowledge or experience. Now in 2025, James is looking to scale up his real estate business and do a ton more units. And at the very end of the video, I'm gonna share some tips and tricks with him so he can scale his real estate business. Without further ado, let's dive in. Hey everybody, welcome back to the podcast. Today I'm sitting down with James. James, thanks for coming today.
Yeah, thanks for having me.
Of course. So tell everybody about your real estate investing journey so far.
Yeah, so I joined Flip System at the tail end of last year, really in January was when I was kicking it off.
Nice.
And after a few months, did my first deal, and that was a leveraged deal. And that ended up being a challenge. I got into my second deal, which I did a cash deal on. Okay. But the first deal ended up having it was already occupied. Tenant didn't want to leave. It took them about 2.5 months to get the tenant out. And then when the construction was about to start, the rehab was about to start, then there was a burglary and then items stolen. And then when I was in the middle of making the claim for that, and I'm still, working on the other property, getting that going. When I was in the middle of making the claim for that, the first incident, there was a second incident, and they never determined whether it was arson or whether it was accidental, but the detached garage was entirely burned down, and then the side of the house was burned down, so that was left the house open. Wow. So meanwhile, I'm still on a hard money loan, already delayed by the tenant that had come in there.
Yeah.
And right now right now they're just getting I bought it last April, and they're just getting going over the last week and a half, 2 weeks on the renovations.
Wow.
And then, dealing with the draws, and, I already had money set aside for the renovations, but then on the insurance side, they expect everything to be, up front.
Yeah.
And so then having to come out of pocket on that. So what I decided on that one, I was going to do a flip on it initially, but because I, was so delayed, and because I had, lost, fair amount of monies and a lot of opportunity costs too, I decided to hold the property and rent it out.
Gotcha.
And so that will be the objective when they're done in a month and a half with this. And then with the other property that I purchased, I kind of it was an as-is sale from a corporation, and so there was an estimate, and I found that one on both of these. I found on Flip System, through the portal. But that was an as-is sale, no inspections, just a brief walkthrough by the my project manager and broker. That was it. But that ended up it didn't quite double, but the renovations ended up going way up.
Wow.
Now, it had a high appraisal value, which is good downstream, but because of those additional costs, I was going to flip that property.
Yeah.
I decided to rent that one out, and I actually rented it out in October. So at least I got something that's cash flowing right now.
Good. Awesome. Which market is this in?
St. Louis.
St. Louis. Okay, cool. And then is this your first, this last year has been your first dabble into real estate, or have you done any kind of real estate before?
Yeah, I mean, I just inheritance. I have a property with my brother up in the Bay Area where I grew up.
Okay.
So dealt with renters and dealt with leases and things like that.
Yeah.
And other than that, I did purchase a property on a short sale after the subprime, like in 2010. About 30 cents on the dollar. It held that for like 10 years, had tenants in there almost all the time.
Wow.
And then sold it at a, at the full rate that it originally was worth. And so there was good profit on that and a good tenant throughout. So I had that experience, but never did I have this involved of an experience and, kind of the school of hard knocks. And if I had one thing to do going back, I would have paid a lot more attention to the teachables, and now I've learned from it, and that's fine. I look at that as those first couple, and I actually just put an offer in today on another property. So
awesome, cool. Where was that house that you bought on the short sale? The 30 cents on the dollar.
That was in Vegas.
In Vegas?
Yeah, Summerlin.
Okay. Gotcha. And then did you try to keep doing, like, did you ever try to invest here in California or more in Vegas? Anything like
Other
that?
than my, primary residence, no. And I wish I would have done it sooner. But then, and I'm trying to remember, I think I came across it, or there was some kind of a marketing piece for Flip System, and it always had intrigued me because I spent, better part of 2 decades in the commercial real estate data industry, working for a big company called CoStar Group. They bought, they bought apartments.com. And and so it almost gave me a little false sense of security because I understood how markets worked and analytics and a lot of things, but this is a different beast entirely. And I know you've got the system wired, and it's like just follow the process. And so I'm now in that.
Gotcha. Gotcha. And then were you so you were working in the data piece with CoStar, but now you do sales consulting, or are you doing sales at CoStar?
I started out in sales at CoStar, and then became a specialist, and then went up into management. Was running the Western U.S. for eventually for the debt and equity division, where we were dealing with private equity, investment managers, and then lenders on the other side. Okay,
gotcha. And did you ever try to invest out of state on your own?
No.
Just saw the ad and you were just like, all right, well, this could be my. But did you know that investing out of state was like the only option, or?
I knew California wasn't an option for this. Like maybe 20 years down the line. And, if I don't mind having tenants squat for 2 years.
Yeah. I gotcha. Did you ever have that problem in the Bay Area house with squatters or evictions or anything?
No, fortunately not. And my understanding is that it's not just in the lower income areas. There are a lot of professionals that kind of took advantage and are taking advantage of that loophole kind of in California. And the prices are just so extremely high that unless you're at a certain level, or maybe and I've also started invested into a couple syndication deals, which are going to be longer term. They're like 5-year holds, and I set up a real estate, got involved with the real estate IRA so that I can invest in that, and then get the benefits of, the no capital gains, as long as the money's going back in, and and I've got someone else that is doing the purchases and the money transfers on my for my LLC when it's done within the IRA.
Nice. Cool. And what's the goal with everything real estate related? Is it like to build a portfolio? It seems like the couple deals you've done so far were going to be flips, transition to adding to the portfolio. Is the goal really just to build up a portfolio?
It's both. I want to do flips, and that was my initial intent. But also, when I was initially kind of getting qualified for, what is your objective? What price range are you in? I want to keep going upstream on that, and then maybe get to where I'm, doing duplexes, and then getting up into, commercial, like 5 units and up, like multifamily, and a balance between the two. But right now, actually, because I have some monies in my mind to recoup, I don't mind having and I'm doing it outside of the IRA so that I will just have it treated like ordinary, income. But I want to, start getting some cash flow. So the objective is to have, a dozen plus properties that are cash flowing, having that passive income, but then putting money to work to do flips and get some more immediate income.
Gotcha. Okay. And how many hours would you say you're spending right now on the real estate, or for the last 9 months?
It had varied. It probably dipped a lot because I was kind of balancing, I was focusing on my sales consulting, but that's been a little slow this year. So I've started, putting a little more time now into this, and I'm excited about it, and really drilling in and trying to follow the process. Some of it again, I just learned the hard way, and then I go back and watch the Teachable, and I'm all, okay, well, and I was warned about this, but I wasn't, because I didn't listen to it.
What is the biggest lesson you've learned so far?
Well, I'd say in a big picture way, it is follow the process. It's tried and tested. You've done this. You've been doing it. You are doing it. You know what to do in your group. And I would say follow the process. Take advantage of the resources. And can find your own deals or whatever off market, but it's, then running it through PTS. I actually did that with this deal that I just put an offer in on today. I just built it into PTS.
Nice.
And then had it reviewed yesterday, and got some good feedback on it.
Perfect.
And then, decided to pull the trigger on it based on all the numbers.
Nice. That deal's off market?
No, that one.
Or you just found it yourself?
No, I didn't. My broker, my agent,
oh, nice,
sending me some stuff.
Oh, nice, cool.
And no, it's not off market.
Okay.
Yeah.
Gotcha.
Yeah.
And then what's the goal the next 12 months then? Obviously finish up these couple of deals you have, refi them, and then is it to kind of like double down and maybe do like 1 or 2 flips and 1 or 2 buy and holds?
That'd be about right.
Okay.
My goal would be to do 4 or 5 deals, and then also I'm still got some money set aside from in the IRA for doing some more syndication stuff
nice.
as well. So really doubling, what I did this year. So if I do this deal, for example, or another one before the end of the year, which is my goal, then I will have done 3.
Nice.
If it weren't for the setbacks that I had in those other properties, I probably would have done 4 by now.
Yeah.
And then so I'd like to, just keep growing it, and I think I can handle the capacity now, because I did learn a lot from those experiences, even though, some of them were bad, but you learn from them.
Yep, exactly. And then long term, do you see yourself building a portfolio and doing real estate more full time and walking away from the sales consulting, or what do you see long term?
Well, the sales consulting, it's my own company.
Oh, okay.
I can always do it,
Nice.
as I please. And right now, where I'm going to go is where the opportunity is. And so if the opportunity is presenting itself on the real estate side, and I keep building that, then maybe it's just a nice to have to do some sales consulting.
Yeah.
Whereas this actually, unlike the sales consulting, this can provide almost like an annuity revenue stream, if you will.
Yeah.
For especially on the buy and holds.
Yeah.
And then having some faster income on the flips.
Gotcha. And then for your sales consulting business, do you just go to? Is it for like startup companies, or do you go in and build a sales team, or what? How does that?
It can be any of the above. So it can be in the scaling phases. If they're well-funded startups, they have to have money. That's one of the problems there. And I focus on on technology companies because that was my background, in SaaS and different kinds of hardware, software. And then I've done consulting for AI, mobile device solutions, and so. That it can be with companies that are, the range I kind of focus on is $1 million to $50 million.
Okay.
But it can be above that too. But that's usually in the range where, my title officially is like a fractional VP of sales. So I'm taking all of my knowledge and experience, bringing that to the table for those that small, mid-sized businesses that can't yet afford or aren't even aware of the fact that this is an option for them.
Gotcha.
And the fail rate is so high, or just staying mediocre.
Yeah.
And it's not just sales, but it is oftentimes, more often than not, a revenue issue.
Gotcha. Interesting. Okay, cool. Going back to the real estate side, like, did you tell people, obviously you live in California, we're here in LA, but did you tell like family and friends what you're doing about investing out of state, and did their brains explode when you told them you're buying houses in St. Louis?
Yeah, some people think it's a little bit, some people are going, why St. Louis? And I go, well, it's one of the owner-friendly states that flip system has narrowed down to, and California ain't one of them. And so, So, and I don't know, what is it, like 15 states or something like that?
Yeah. 15 cities.
Okay, 15 cities, main cities. And different responses. Some people are very intrigued by it, because they're saying, well, because they maybe have invested, and been an absentee landlord, and that can be a nightmare, and if you're trying to do flips, it's like you got to have the boots on the ground, you got to have the project manager, all the financing set, the insurance, the broker, everything.
Yeah.
And so I think having that set up and then having this system to follow, it takes, a lot of the, notwithstanding the things that happen, which I could have maybe avoided, I don't know. It takes a lot of the guesswork and the fear or out of it, of being somewhere where you can't physically go there.
Yeah.
You can, but not very often.
Yeah.
So I think doing my first deal and then doing the second deal, that built up the confidence, in doing it. And I did switch brokers, not because the first broker was good, but she really focused more on higher end stuff, and so it just wasn't that responsive. And in St. Louis, as you know, especially when you're down at a certain price range, there's a lot of cash buyers, and it's very competitive. And so the amount of time you have, to get in there and make an offer. And then if it's not a cash offer, it's like, you might have
it's gonna be tough.
Have trouble with that. So
Yeah. So you've been making. So your second deal was cash, and then this third deal.
This will be leveraged.
Leveraged as well.
Yeah.
Okay, using the hard money lender.
Yeah, and actually, you'd mentioned asking some questions at the end, but one of them is, I noticed that there's like the $200K if you qualify for it in loans. That's something I actually am interested in learning more about. I have good credit.
Yeah.
And so that's something where I think I could, put that money to use.
Yeah.
Maybe when I sell some of these other properties, if they're appraised well, doing a cash out refi or things like that, to be able to keep building on it.
Yeah. So the $200K at 0% or $150K at 0% for 12 months or whatever, that company or those companies is kind of like credit card stacking. It's that, or they can get you like a business loan as well. So like your brand new LLC can get a business loan. It's almost like you create a brand new business and they can go and open up a new card or a new line of credit.
Got it. So
that's what it is. If you have cash, I would recommend using the hard money lenders first, just because it's asset based. It's like super easy. And they're lending on the deal. They're kind of backing you along with the deal, and they know more about it. Versus the 0% interest credit cards are kind of like, if you can't pay it off, you're kind of shit out of luck. They can't take the asset. There is no asset. It's going to come after you personally. So I would use.
So is that a personal guarantee then, as opposed to they're not looking at your assets and then saying, okay, you're an accredited investor, blah, blah, it doesn't matter.
Correct. So that's why those 0% interest credit cards are a little bit more scary.
So this is actually a credit card.
It's a credit card, and then they'll help you go and apply for multiple credit cards with your business. So you get like multiple business credit cards, and then they can kind of, if your business has done something like flipped a house or bought a piece of real estate, then that allows them to increase their limits and all that kind of stuff.
But you have to get different credit cards. Is that how you get up to the 200K? Is by having like 10 credit cards?
Yep.
Okay.
Exactly.
I didn't know the devil's in details on that one.
Yeah. I wish it was just one. So there is somebody else in the Teachable, though, that you can reach out to. They can get you like $100,000 or $200,000 business loan. It's just as expensive. Like they charge like a 10%, 5% fee up front.
Oh, okay.
So like, hey, here's your $200,000, but you owe us 20. And so it's like, all right, well, $200,000, but actually I have like 180.
20 payable over. Oh, they're only giving you 180 then.
Yeah.
Okay.
Yeah. So that's the kind of catch-22. It's either that and it's super expensive, or it's the 0% interest credit card stacking. So you have like 5, 6, 7 credit cards.
Do you know people that have done that successfully? Or?
They have done it successfully, and a lot of them are using it kind of like as a backup. So like if they do have like renovation costs that go over, or they have like a $20,000 renovation, they just want to put it on a credit card, they can put it on a 0% credit card for 12 months, and then they don't have to pay that back for 12 months until the deal is sold. So they'll get hard money lender for the purchase price. They'll put some money down for the purchase, and then the renovation, they'll just put the draws with the credit card, and then they don't have to deal with the hard money lender on the credit card side.
Okay.
So that's a smart play, because also too, if you know you're going to sell it or refinance it, it's also easy to just pay the credit card, because it just do it in draws. So every 2 weeks you do a draw.
Yeah.
So that's what I would recommend it for. But like doing everything with a 0% credit card gets a little, well, first of all, gets crazy to track it all.
Right.
Track, this credit card is this, and this is this limit, and all that kind of stuff. So I would just use it for just the construction if you can, if you want to even.
Yeah, that's something worth considering.
Mm-hmm.
And those are a 12-month, or because I know there's some.
Typically, yeah.
I had one was a 24-month when I just moved a balance over. And,
yeah.
So,
yeah, and I just got one too. I think I got a Chase one for, I think it was a 12% interest only as well for a business credit card. Anything else you need help with, or anything else you've been kind of thinking about, or anything I can answer?
Is there, when you're building your own deal in there, is it, and then submitting it for review?
Yeah.
Is that the same process as, well, I guess it's not, because when I looked at a property that was in flip system, moved it over, and when it went to the analysis phase, I didn't see the opportunity there to have the deal reviewed within PTS. Maybe that was just a quirky thing that was going on.
Yeah.
But you should be able to have anything reviewed. Right?
Yeah, anything.
And it doesn't matter whether you input it or whether it's coming out of.
No. It should be any. You can put 123 Main Street. Yeah, if you put something in there and it doesn't work, just click the like support and then just be like, hey, I put 123 Main Street in. There's the buttons aren't.
Well,
working.
it says under review, but then then analyst said we can't find it.
Oh, weird.
Yeah. So
okay, interesting.
And so then I just gave them the address, gave them everything, or the details, but then got it reviewed, and that may have just been an anomaly. It's probably just a
because you should
thing.
it was probably just a bug, but because you should be able to put in use the marketplace and then put in any kind of other deal that you find, because some people do they'll have like a wholesaler, they'll go like on Facebook groups and find wholesalers, find those deals, put those deals into the software, and then they still get those. I mean, we want to review those deals too to make sure.
Right.
So you should be able to put any deal in there and then send that along and get that approved by us and the team on the ground with Connect.
I think you advised kind of stay away from the wholesalers and
for your first couple. For your first couple. Especially for somebody that's just brand new, like getting into it, it's just a lot more nuance that you have to deal with. Mm-hmm. And you're not dealing with a realtor who's licensed anymore. Now you're dealing with just it could be a kid in his basement, a wholesaler. So that's the main difference. And then there could be like non-refundable earnest money. There's this thing, that thing. So it just gets a little bit more tricky when you deal with wholesalers. But after you've kind of done a couple deals and you've built up a little bit of a resume, then you can start looking at wholesale deals. Yeah,
that makes sense.
Yeah,
you have a little more cash in the bank, and then it's a great deal.
Yeah,
but then it's a risk reward thing.
Exactly, and then wholesalers too. A lot of them don't want to accept hard money. They're going to want cash. Within St. Louis, a lot of the deals too, and below 50K or 100K want cash as well. But a lot of the wholesalers also are going to want not use hard money. They're going to want cash only and all that kind of stuff too. So that for a newbie is also pretty tough. If you've never done something and someone's like non-refundable earnest money and this and that, and you can't use hard money, it's like, geez, I'm going to really get screwed here.
Right.
So that's the thing.
Yeah, I noticed on the buy and holds that are now available where it's actually labeled that way, which I think is great.
Yeah.
That there's a built-in, it basically defaults to $5K renovation. Essentially putting it aside. Is that essentially for vacancy, repairs, whatever? Is that covering that
correct
cost in there?
Because typically those deals, when we analyze and buy and hold, they either are vacant or they have tenants in place, and so it's just a nice kind of buffer to have just in case you want to go in there and you're like you buy the property and it's just kind of like deferred maintenance. So you go in, you buy the property, HVAC is blown out, the hot water tank is this, the roof has some leaking, blah blah blah, just tenant complaints in that first month or two. That 5K, 3K can kind of come in and just cover that and just take care of the deferred.
Which I had a little bit of that happen on the property that I paid cash for.
Not
a huge amount, but it did happen.
That one was tenant occupied when you bought it?
No, that one I got the first two. Not tenant occupied.
Okay,
the one I just made an offer on, literally that went in today, is tenant occupied, and so then I was underwriting it. To where it was cash flowing there.
Gotcha. And are you gonna get the tenant out of the property? What are you gonna do with that one?
No, and the thing is, we don't have information. My agent's kind of frustrated with the listing agent because he's not very responsive. And he actually had another potential buyer that backed out because they wouldn't provide the tenant information before they made the offer. Now we've made the offer and I've got some contingencies in there that I can walk away from it.
Yeah.
But now we make the offer, see if they get back today. Mm-hmm. But then the next thing's obviously going to be now they're required, right, to provide the tenant lease information. So they're paying like $1,100 a month, which is right, almost it's around market.
Oh wow, nice
for where it is.
Okay.
And so, if they, I don't know, the thing we don't know is, are they month to month? How long have they been there?
Yeah. Have they been paying?
Have they been paying? All that stuff.
Yeah.
And so that, I guess, will come out in the wash when.
Okay, interesting. So what's the plan with this one? Buy it, depending on the tenant, I guess. But if the tenant's been there and paying, you're just going to buy it cash and just hold it? Or?
Yeah, I'm not buying it cash. That one's
sorry.
leveraged.
That's right.
Yeah, so that one I'm just putting 20% down, and then I'm going to do hard money loan on it.
Nice.
And then, hold it, for a while.
Okay.
Because it's still, it would fall into that category of the buy and hold where it's not a flip.
Yep, exactly.
Maybe 2, 3, 4 years down the line. Yeah.
Okay. And you got a hard money lender to do like a 30-year loan on that? You're going to get a long-term loan.
Well, actually, I'm sorry. You know what? I'm mistaken on that. This one, I'm not doing a hard money loan. I'm just doing a traditional 30-year.
Okay, good.
It.
Nice.
Yeah.
Anything else that you need help with or any questions you have?
I'll probably think of a bunch when I leave here. I have your email.
I mean, in your time when you were working at CoStar, did you were doing data and data analysis? Did you ever?
I didn't do data.
Okay.
I did sales and then and then went into management and managed sales teams.
Managed the sales teams.
Software sales reps. Which,
okay.
Then it went web based, but. And then when we, bought like LoopNet and Apartments.com, then it was online marketplaces and advertising. So then I managed multiple teams and then specialists, and so.
Gotcha.
What they came out with was, which was pretty cool, is it was called CoStar Market Analytics, and it's kind of like the Bloomberg of commercial real estate. And so it's heavily utilized, and so a lot of it was about data and analysis and about the markets. And you can kind of on the residential side, it seems that you provide a lot of resources. I used Rentometer on to look at things and get some some lease comps and so forth, in addition to what my broker gave me. But it is not like CoStar is going into that now. They're going to probably take over the residential side. They're already starting to do it. And then next thing I know they will do is to put analytics that are kind of, rather than having to piece it together and go all these places. It costs money, but it'll be there to give more market intelligence, into areas.
Interesting. Yeah, because I've used, so I actually had like 5 apartment buildings in Memphis, Tennessee, and I didn't want to, but they were worth like $1 million to $2 million bucks. And I was like, no way in hell am I paying a realtor like 5%, 6% to sell this thing. So I listed them myself on CoStar.
Okay.
And I sold them all myself with that, and probably dealt with your team.
It's free to list on CoStar. LoopNet, if you're advertising it, that's where that.
LoopNet.
Because you have to pay to advertise on LoopNet, but it's not that expensive.
Yeah. And were you managing the sales team? You said just for the West region or for?
I had different positions. At one point, I was running LA, OC, Vegas, and Hawaii. And another time when I was managing specialists, I was in the debt and equity division. I was running the Western U.S.
Gotcha.
And so I had different positions over time.
Gotcha. So, and then you were selling to like hedge funds, and the hedge funds would actually buy the CoStar data? Is that what they were after?
There could be hedge funds. It could be private equity. It could be institutional investors, REITs. And then on the lending side, all the regulatory agencies like the FDIC, the Federal Reserve, and the OCC, they used it for when they were coming in to do their exams. And so in order to be defensible, and after the subprime, it went downstream to mid-market and then down to community banks, they were starting to be held accountable by the regulatory agencies. And so then they started becoming clients because they had to be defensible for when the examiners came in.
Whoa. So you guys were actually, but they were after the data of like they were after the customer data or after like the property data?
Well, it's property data, analytics. You could do, put your portfolio in and then see how and do peering analysis where it would perform against your competitors and then against the market. So you could build that up. Well, that also, like if the FDIC came in or OCC, I'll say, hey, the multifamily market in this area is not doing well. And, you're very heavily concentrated here. You got loan concentration risk. But then they could come back and say, well, no, that may be true, but our portfolio is outperforming the rest of the market by 10%. And so it's like this, back and forth thing. So
interesting.
That's on that side. But then there's also with the comps that they have, they could get to the names of the buyers and the sellers. And so like Marcus and Millichap is the biggest multifamily broker out there. They hardly ever list, and they double end deals. They do everything internally. And they use like the CoStar comps data to be able to identify who the buyers and sellers are, because it gives the names and the phone numbers about 70% of the time. And so they use it for prospecting there.
Wow.
And then brokers will use it for valuing their deals, for finding the lease availabilities, for finding tenants. And so it's like it basically addresses, appraisers use it as their lifeblood, for being able to appraise properties.
Wow.
It's a big part of what they do. So the whole commercial real estate ecosystem really relies on their data in one way or another.
Damn. Because I guess that's true, because the MLS doesn't report on it because it's multifamily or commercial.
I think that with residential, that they're required on the MLS to provide information and so forth. On the commercial side, it's just public record. But then the owners are usually hiding behind a LLC or partnership or whatever.
Yeah.
And so what they do is they've got thousands of researchers and then field and researchers phone aerial surveillance planes that pick up new developments and everything. And so they're getting all that information and then spending a bunch of hours talking to people on the buy sell side. And the brokers, the owners are usually tight-lipped, they want to hide, but the brokers, they know that it's garbage in, garbage out, and they need the data, and so then they cooperate, and then they give data in, where unlike the MLS where it's required, it is absolutely not required on the commercial side. So it's just a different beast.
Wow, that's crazy. Yeah, because in the residential space, I mean, it's so easy. It's just like you just get MLS access. There you go. There's all the data you could possibly need, and then every city and every county, it's challenging to get MLS access, but you can just buy. I mean, that's what Flip System did. We bought MLS access and MLS data, and it seems like if we did want to flip system multifamily, CoStar would be kind of the company that you would go to get the data for it. Yeah. Cool. Awesome. Well, thank you so much for coming. It's great to meet you and,
you as well.
Chat with you.
Thanks for having me.
Of course. See you on the next one.
All right.
If you enjoyed this and want more free content just like this, there is a free course that I posted on my YouTube channel. It's over an hour and a half long. Click that, go watch that, and subscribe. See you on the next one.